Hi, and welcome to my portfolio performance for February 2026, where I take you through the top five good performers and, for me, unfortunately, also the top five bad or just pure ugly performance. This just looks at the movement of my position in my portfolio at the end of 2025. And I will give you the risers and fallers versus the position that I had in January. None of this is financial advice. It's probably a little bit more of a light-hearted view of my portfolio, but also, where I need to take action and where I need to let things fly and develop. So here we go. Let's start off. Microsoft is the first one. I just bought it in February, and you can see my buys and sells. I put the link on so you can get to see what I've bought and sold, but I bought it. It's not performed very well. It keeps dropping. So it's a brand new entry in my uglies at number 5. On the good side, Pets at Home was the third best performer versus the end of 2025. It's dropped down to 5. It had increased by about £38, and that's gone up to just above £47, so almost £10 improvement month on month. At 4 in the ugly is Visa. So yes, I've added to the position. I've taken my average down, and that's why it's gone from ugly number 1 in January just to ugly number 4 in February. And given what's going on at the time of recording, it's the middle of March, and we're all in with the Middle East war, unfortunately. I think it's going to be quite a struggle to see a top 5 good performers this time next month. There'll be plenty of ugly, so the ugly will have quite some battle, and I think both Visa and Microsoft could well be there again. Right, let's be positive and let's see what's number 4 on the good, and that is my Vanguard FTSE ETF, brand new in, and has increased by £61. Number 3 on the ugly list, Hikma Pharmaceuticals, brand new in. It's just gone down and down and down. Yeah, not a great position. Almost £70 worse. Not good at all. And on the reverse side, top 3 below. So if you look at the ugly, and in number 3, it's £67, almost £68 loss. M&S is a £61 gain versus the end of last year. You can see the ugly starting to outweigh the good. But yeah, number 3, M&S, it was number 4 last month, up a place. And if you look at my video, I talk around M&S, so I won't ruin that video. I say click on it in the description and you'll see. So I'd imagine M&S will be in the good side for quite a while. Right, top 2. PayPal. PayPal. And all the pain in PayPal. From a £42 loss and an ugly number 4, it rockets to number 2. How is PayPal not number 1? What could be worse than holding shares in PayPal? Over £100 loss versus my position at the end of December 25, which is absolutely terrible. I will be holding the bags for quite some time on PayPal, I can tell you. But yeah, something even worse than that. That's special. And you'll see it in a moment. In number 2 for the good. And it was number 1 last month. Realty Income, £124, almost 125. A big jump on what it was last month, which was a £46 gain. Really good. Like Realty Income, I got in at a really good price, and it's paying off for me. And I love the monthly dividends, which is predominantly why I got it, to be fair. Right, so the answer to what is worse than PayPal is... Oh, sorry, I've gone the wrong way. My apologies. Here we go. SoFi, or Sophie, SoFi I'll call it. £216 loss on capital versus the end of last year. It's not just bad, it's terrible. And to give you context, I started investing in June 2025. So it's now sort of 9-10 months old as I go on. And there is an investment of just under £19,000. So a £200 loss on that is not great. That's an understatement. So Sophie has caused me even more pain than PayPal. So that's pretty grim. And you'll be able to see at number one, if I could reveal it for you. Sorry, the total loss for those top five, £470, which is really bad. And the top five last month was 260. So you can see there, it has, during February, got much, much worse for me. Unilever. Don't expect to see £151 this time next month unless a miracle happens. So yeah, it's got up by over £100. It was number two. It's now number one. That is brilliant. But as you can see from there, that does not offset the loss that I've made on Sophie, which, you know, you add up the good, and luckily the good almost offsets the ugly, which it didn't last month. But you know, these are testing times, and it'll challenge. While I make good humour of it, let's be honest, it is a challenging time at the moment in the stock market. If you just take a very short term view, which I don't, I'm in it for at least 5 years. I need to sort out some of the things, especially in the ugly, predominantly around what I'm going to do with PayPal and Hikma Pharmaceuticals. I need to consider that. I'm more than happy with my Vanguard position. And the Realty Income is doing pretty well. And I talk around M&S in my buys and sells in another video that I'll send the link on. But, you know, this is just a very short-term position. None of this, you know, if you've bought in now at the right price, then, you know, my ugly, say SoFi, is probably, it could be one of your best ones. It's just the position in my individual portfolio. And in no way does this mean that you should buy, sell in any of these companies. This is just, like I say, against my individual portfolio. So that's it for this month. So that concludes what is not another good month for me personally in terms of the top five portfolio performance. I suspect March will be even worse. But if you enjoyed that, and I hope you come and join and see just how ugly March is going to be. Spoiler, it's going to be really ugly. But in the meantime, stay strong and make sure you stay happy investing, and make sure that you see it for more than just the current position that the stock market is showing. Until next time, many thanks, and any subscribers or thumbs up greatly appreciated for my very, very small channel. Many thanks, one and all.